Dog team,
Bark, bark. What up, though?
hanging in here.
Good. Ready
I
to
just,
rock?
yeah,
How's your week been so far?
yeah, it's different, but we here.
Huh?
How about yourself, bro? No, Saturday was a little difficult.
Yeah.
Got my
Yeah.
condolences.
Thank you. I appreciate you. Getting through it, man. It's like I guess the first full week, the beginning of the first full week of what's to become, what is, and however that works out. So we here. Um, and I appreciate you. Thank you for that as well. Can you see my screen?
I can.
Cool. So I always like to start where we left off, and that's with any unanswered questions, any concepts that you're a little uneasy with. I always like to start with revisiting that, and then also see if you had any questions about the homework.
Um, so the only one of the questions I guess I'll say is ROI, the return on investment. Is that what that was in the 3 week homework?
Yeah, absolutely.
Okay. So that for all of them, I did not know what to put in that spot. Um, but everything else, I did understand. I knew where to get it and where to find it, and if I need to do it again, where to go. But that was the one field I didn't know.
So let me pull this up here. Week 3. All right. So let's see. Vehicle. All right. So I just did it for you. It was that particular column was supposed to auto populate for you. So if you go back and look at your homework, it's updated for you, but I also share my screen and try to make it a little bit bigger. So all today ROI is doing is took the difference between the low of today as well as the high of today. And it reflected this it's
Mm-hmm.
F2G2 2 minus G2. Now you put these numbers in here, right?
Yeah.
Okay. Uh, tab. So it took the price you entered for the low and the price you entered for the high. And on the day you did your homework, this column is reflecting the difference. So like in this case, in the day you tracked the Oracle went up 8% in that one day. And we know there's no bank on earth that's going to give you 8% in a year. So just giving you a reflection of how stocks can go up or go down. So there's a particular day when you tracked it, all the stocks on your watch list happen to go up that day. Now, one thing that's a exercise to take it to the next level, though, is remember column C is dynamic. It's pulling today's price. So if you look from where the high was whenever you did your homework versus what the price is today, did your price is today was just solid column C. Did your stock keep rallying since you did your homework, or has it declined? Looks like Baba kept going up. It was 91 when you tracked it, and now it's 96, right? Oracle kept running. It was 159 on a high. It was 172 on the high when you tracked it, and it's down to 164 from the high when you went at it. Meta's risen since it's high, almost 10 points. Google's pretty much flat. Delta's flat. PayPal went down like a buck. Lowe's up a little bit. Nike went down a buck. Dollar General down a buck. And like I said earlier, Alibaba went up nearly $5. So you can just kind of get a vibe of how they're moving. And then you also have things like the 200-day and the 50-day moving averages to compare it to. So like in the case of Alibaba, it's clearly in an upswing because its 50-day is higher than its 200-day. But look at how high it is right now, right? And they got good volume, 13 million on the volume, double, 8-figure volume is good volume. And it's not far off from their average 3-month volume. Now, what you didn't do is you didn't label them. You still want to label. You always have an assignment to label your cards after each week because the game is to narrow it down. So you're supposed to pick, I believe, like 2 aces, a face, and a wild, and take 4 cards with you to week 4, because week 4 is on the tab, the final 4. Right here. See that final 4.
Yeah, they, yeah,
So you
somehow it did erase. I had actually moved it. And that might have been why it erased, but they were labeled
okay.
at column down.
No problem. All right. Well, I'm going. If there's no other questions, then and since all your columns are properly populated, I'll go on ahead and get to the lesson at hand.
They
So this is
were
week
they
4.
were. I think I had them in order.
No problem. So this is week 4, correct?
Yeah.
All right. You're going to need a blank sheet of paper or a notepad, something like that, and preferably a piece with no lines. So like you got a piece of copy paper or something like that. You're going to probably need a copy paper and a straight
You going in
edge.
and out tonight? Yeah, it's like you going in and out tonight.
Okay, maybe I need to put on some headsets or something. Let me see if I can find something or find a microphone.
Yeah. But you were saying get a pad of paper and something to write with tonight.
Yes, sir.
Okay.
You may need to take your video off because that affects the buffering as well. So maybe
Okay.
you can just put your screen, your whatever icon or
Gotcha.
picture instead of the video.
Okay.
Okay, so I do have some headsets here. Give me 1 second to get these headphones together. All right, hello.
All right.
Check. Headset now.
I just heard you say headset now.
Yes, can you hear me through the headset now? Can you hear me
Yes, I
clearly
heard you say,
through the
can
headset?
I hear you in the headset?
And is it clear enough for me to teach? Can you hear me clear enough to teach? Can you hear me clear enough to teach?
I don't think so. All I heard you just say now was enough to teach.
Can you hear me enough to teach?
Only on that. The one you said previously, I did not.
Can you hear me clearly enough to teach at
Yes,
this moment?
yes, I can now.
Great. All right, so we're doing stock market 401 today.
Gotcha.
Japanese candlesticks. Are you already familiar?
A little bit.
Great. Should make this all easier for you. So on your paper, you're going to turn it horizontally or
Gotcha.
landscape.
Okay.
And what you're going to do is you're going to write a set of 4 numbers on both sides of the paper. And the numbers are going to be the same and they're going to be equal distance from each other on each side of the paper. And you're going to put them on the extreme right and extreme left. So starting on the left-hand side, these would be the numbers. So near the bottom of the page, you put $5. You can leave some space underneath the 5, but closer to the bottom, put 5. Raise up some lines, put $10, and then double that space, that distance between the 10 and the 20, as you see on the screen, something to that effect. And then put 25 above the
Yeah.
20. Okay.
Gotcha.
Now, what I want you to do after you've done that successfully on the left-hand side of your paper, do the exact same thing on the right. The exact same numbers, the exact same sequence, the exact same spacing. The only difference is what side of the paper they're on.
Gotcha.
Okay. Now, what I want you to do is make some space. So only focus on the left-hand side of the screen right now.
Okay.
What we're going to do, and I'm gonna tell it to you first. So don't do it as I say it, because I'm gonna tell it to you, and then I'm gonna show it to you, and then you do it. Cool?
Got it.
I'm going to have you to draw. Now remember, I'm going to tell you, then show you, then you go. I'm going to have you to draw a rectangle on the left-hand side where the bottom of the rectangle is directly in line with the $10 and the top of the rectangle is directly in line with the 20. That's
Gotcha.
all we're going to do. And you're going to do the exact same thing on the right-hand side as well. Just focus on the rectangles. Ignore everything else on the screen and just draw two rectangles on your screen
Gotcha.
as you see on the illustration. And after you have the rectangles drawn, you can draw a little line that goes from the 20 to the 25 and it goes from the 10 to the 5, just as you see on the screen. A rectangle with a line at the top and a little line at the bottom. Equal distance, equal length on both sides. Let me know when you're done with that, and then I'll start getting into the lesson.
All right. Ready?
All right. So these are Japanese candlesticks. We're only going to focus our energy for the next 5 minutes on the left hand side. In 10 minutes, I'll be through teaching this slide, 10 minutes or less. But I'm going to start with the left. Only focus your attention on the left. Only focus your questions to the left. I ain't got to the red yet. All right. I'm only on the left hand side of the screen. If you try to do too much and understand all the relation, all you do, it's going to throw off what I'm trying to unpack it. All right.
Gotcha.
So, based on what you see, you have a green rectangle. That rectangle is known as the body. If that was a candlestick, that would be the wax part. The shadows are also known as wicks. They're called wicks or shadows. It's interchangeable. But if you keep it candle talk, the body is the candlestick or the wax itself, and then the wicks are there. And in this example, because the wick at the top of the bottom, it's sort of like the analogy of burning your candle, burning both ends of the candle, because it's the wick on both ends of this of both of these candles. All right. Now, all Japanese candlesticks don't look like this. This is a teaching tool, right? This is explaining how this Japanese candlestick looks. But all candlesticks don't look like this. And they all mean something different based on the size of them, the size of the candlestick as well as the size of the wick. But we're going to start based on what we see. So, based on what we see on the candlestick to the left, the green one, the bullish candle, it's bullish because the direction went up, the price went up. Right? When we looked at the charts and graphs from last week during our intro to technical analysis, we saw a lot of jagged lines. We looked at stuff like support and resistance. We smoothed them out and looked at simple moving averages. We talked about weighted moving average, exponential moving average, but moving averages nonetheless, right? Which are lagging indicators, right? They analyze past price action and tells you, well, confirms whether you are in an uptrend, a downtrend, or ranging sideways. It's a lagging indicator that confirms your hunch. And then there are two strong indicators when you have two simple moving averages, whether they're simple, weighted, or exponential. Two moving averages when one of them has short-term pricing and the other has long-term pricing. A common example is the 50-day price action related to the 200-day. That's why that was your assignment.
Mm-hmm.
And you know that if the short-term price falls below the long-term price, that's known as what? The short-term price falls below the long-term price. What's that known as?
Mm, I don't know.
You don't remember, but you
Mm-mm.
know it. It's called the death cross. The death cross. That means stay out. The short-term price fell below the long-term price. And so conversely, when the short-term price rises above the long-term price, that's known as what?
The Golden Cross or something
Yes,
like
sir. It's the golden cross. Yes, sir. That means it's okay to get in. The coast is clear. Safe to move amongst the cabin. And those are lagging indicators to confirm that it's all good. Japanese candlesticks help you to predict what happens next. Japanese candlesticks help you to predict the future. These are not lagging indicators. These are predicting indicators. That's why people love them, because it helps you to predict the future. Investing in stocks and trading stocks would be a lot easier if you could predict the future, huh?
that? Oh yeah.
So that's what these help you do. So a candlestick is made of four components. It has an open price and a closing price. All candlesticks have that. You need an open and a closed price. Candlesticks can have a low price and they can also have a high price. All candlesticks don't have lows or highs, but most do. And because this particular candlestick, has two wicks, that means there's two ways we can read the price action. And there are only two ways it can be read. You ready?
Okay.
This stock opened at $10 a share, fell down to a low of $5, shot up parabolically to a high of $25, and then cooled off and wound up closing at 20. That's one way that's one of only two ways you can read this particular candlestick. Were you able to follow me?
I was.
The other way this could have happened is this stock opened at $10 a share, shot all the way up to a high of 25, came crashing down to a low of 5, and then shot up again and wound up closing at 20. That could have happened as well based on having two wicks. I think the
Mm-hmm.
first version is more likely to happen. That it opened, it tanked, then rallied back up and cooled off.
Mm-hmm.
Versus opening, shooting up, tanking, and shooting up again. But it could have happened both ways. Now, let's say you take your index finger and you cover up the 25.
Okay.
So now there's no high. And that means there's only one way you can read this candlestick if there's no longer a wick at the top. It opened at 10, it fell to a low of 5, and then rallied up to close at 20. And that's all that can be said.
Gotcha.
Now, let's say you switch it, and instead of covering up the high of 25, let's say you keep the high of 25, but now you remove the low of 5. So cover up the 5 now instead.
Gotcha.
Because it only has one wick, there's only one way you could read it. It means it opened at 10, shot up to a high of 25, and cooled off and closed at 20. And that's what happened.
Gotcha.
Now, let's say you cover up the 25 with your index finger and the 5 with your thumb. So now you have a Japanese candlestick with no wicks. It's just a body. It's only
Mm-hmm.
one way you can read that as well. It opened at 10 and it closed at 20, and there's nothing else to be said about it. Nothing. So if you see a candlestick that's all body and no wick, that's called a marabutsu. A marabutsu. Marabutsus are actually the most bullish candlestick that can be formed on the chart because it's absolute certainty in the price action. This stock opened at 10 and closed at 20, and that's it. It was no uncertainty, no uneasiness. It didn't have no lows. It ain't had no highs. It just opened and closed case. Open at 10, close at 20, done deal.
Marabutsu.
Marabutsu. Yes, sir.
Marabutsu.
Are there any questions about how to read the green candlestick on the left?
No.
All right, so we're going to now take our conversation to the right. To the right. And as we take our conversation to the right, we're now looking at a bearish candle. So one thing that's going on is its direction is different, right? You see it's
Yeah.
going down. Yep.
Mm-hmm.
Notice the prices never changed. We put the prices on the paper when the paper was blank. So we never changed the prices. The only difference between a bullish candle on the left and a bearish candle on the right, because the colors are relative. I mean, that's to help easily identify them. But to still know the difference without noticing the color is the open and the chain. The open and the close are reversed. High is still high, low is still low. All the numbers are still the same on both sides of the paper. The only thing that happened is the open and the close switch
Mm-hmm.
because the closing price has to be lower than the opening price if the candle's bearish. The price went down. We're just documenting its journey of going down. So knowingly, all we did is switch the open and the close. Let's read this Japanese candlestick with two wicks, the same as it was two wicks on the green one. How did this read? It's only two ways you could possibly read it. One is it opened at 20, shot up to a high of 25, came crashing down to a low of 5, and doubled up from there to close at 10.
Mm-hmm.
That could have happened. The other way it could have went down because you got two wicks is it opened at 20, fell down to a low of 5,
Mm-hmm.
rallied back up to a high of 25, and then fell back down to 10 for the close.
Mm-hmm.
I don't think it happened that way. I think it probably happened the first example, but that's what could have happened. The reason the candlestick body is called the body because we don't know about whether stuff went up or down. We do know it opened at 20 and it closed at 10. We know that's the facts.
Mm-hmm.
We don't know about the other pricing that may have occurred in that time period. But with two candles, like it gives extra information, extra data. That's why people like them because you also know, yeah, but it also got down as low as 5 that time period and as high as 25. So you could have got in as low as 5 and quintupled your money and got out at 25 over that time period. So some people doubled up, some people quintupled up. Same time frame, same stock, same price action, just different responses. So now that we looked at those two ways you could do it with two wicks, we're gonna do the same example. We're gonna start with putting our finger over the 25. There's no longer a high. Now, just because it has one wick means only one way you can read it. The only way you can read any candlestick two different ways is if it has two wicks. If it only got one wick, you can only read it one way. So if we took off the high now on this one. That means it opened at 20, fell to a low of 5, and then wound up raising back up the close at 10.
Mm-hmm.
That's what happened. And now if you reverse it and you keep the high and get rid of the low and cover up the 5, it opened at 20, shot up to a high of 25, and then it came crashing down to close at 10.
Mm-hmm.
If you cover up both the 25 and the 5, so now this candlestick doesn't have a high or a low, it's just a candle, and it means it opened at 20 and came down to close at 10. What's that known as? A candlestick with no wicks.
A Marabutsu.
Metabutsu. All right. So that's what it is. That's how you read candlesticks that look like this. Now, again, I told you they come in different shapes and sizes, but are you okay with this part so far?
Oh yeah.
All right, so let's meet some of the other culprits. All right, so
Mm-hmm.
some other ones, and they all mean something different. All right, so here are going to be what I consider the 9 most common. All right, now they're not in a order of strength, strongest to weakest. They're just in a random order. But for strongest to weakest, it actually would be number, if we don't just stand on the bullish row, it would be the third one is the strongest, the first one's the second strongest. No, the third one's the strongest, the first one's the second strongest, and the second one's the third strongest. This is the least strong. So the strongest is called the long bar, and that's the third one on the top row. And that looks very similar to the one I started you off with teaching you the concept. Big bullish movement because the bigger the candlestick, the more the price went up or went down. But in this case, went up because it's a green candle and it's bullish. So second in command is the hammer. Michael Jordan is the long bar. The hammer, Scottie Pippen, right? The hammer has a body. The price did go up some, but it has a very long wick beneath it that looks like a handle, like a mallet or a hammer. But that long wick is the sellers came in, they was trying to sell the stock off, but they got overpowered by the buyers. The buyers wound up still driving the price up. But you can clearly see some sellers have stepped in. That's why you have the long shadow or long wick underneath the hammer. And then the third bullish or least bullish is the dragonfly doji. It kind of looks like a crucifix. It's got a little small itty bitty green price change. So not a lot of price movement, just more shadow than body, way more.
Gotcha.
All right. And now in the next row, the bearish row, it's pretty much the same, except everything's the opposite. Right. So instead of
Mm-hmm.
the long bar, it's called a short bar, but the bar is not any shorter. It's just that's the name. So
Because
when you
it's
hear,
red.
yeah, it's
It's a
red.
bear.
hmm That's the only reason. And now you get further along with your teachings and stuff and exposure to Wall Street, you'll get more familiar with the term, bearish or short. Mostly
Mm,
short. Short means that's the position you want. It's a direction and a position. Direction meaning I think stocks is gonna go are gonna go down. Like if I say I want to short Ford. That means you think Ford's gonna go down and you can profit from shorting it. Short also means I want to shrink the amount of shares I have in my account. I want a shorter position. Going
okay.
long means I'm in it for the long haul. Back the truck up. I want to go long. I want to accumulate more shares of this stock. I'm in it for the long run. I think it's going to go up. So long versus short typically just means you want to keep it or dump it.
Gotcha.
Long is accumulation, short is retreat. Second bearish is the inverted hammer. They're literally exact mirror opposites of each other.
Mm-hmm.
The buyers tried to come in and bring the price up, but the sellers were there to make sure it stayed nice and down. And then the shooting star is the opposite of the dragonfly doji. Right? It's a bearish symbol where you see again the buyers tried to run the price up because you had that long wick up, but then the sellers came in and they were the ones to make the actual candlestick itself form. Remember, there's a difference between a wick and a candlestick. The
Gotcha.
candlestick is what actually for certain happened in the price change. The wicks represent other opportunities of other potential entry or exit points that existed in that time frame. I keep emphasizing time frame because it's so important, and I'm gonna show you. I'm gonna go backtrack and show you. And then you got last but not least these three, the neutral symbols. These are so very important because it represents uncertainty. It's neutral. They're neither bullish or bearish. But when you see these neutral symbols, they're typically a indicator that a reversal is coming up. Especially if you see one of these neutral symbols and it's a candle that prints close to one of your moving average lines or next to one your support or resistance line. If the price
Mm,
is attached, if the price is approaching support or resistance and then hits it with a doji, it could literally mean it's about to reverse in the other direction.
gotcha. Gotcha.
All right. So the first one you see is called the spinning top. It has some price movement, got a body. The tip off is the wicks are long and they're about the same length on the up and the down, like a little spinning top from back in the day as kids.
Gotcha.
It's a spinning top. So we don't know. It could have been green, 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 get hit with the spinning top, might mean the next session be red. Or red, 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 get hit with the spinning top, could mean the next session gonna be green. Right?
Mm-hmm.
You get hit with the double dojis, that's a big sign. Could be really, a potential reversal. But a doji, which is another Japanese word, is the opposite of a marabutsu. A doji, a pure doji, is the third one. It means a Japanese candlestick that's all wick and no candle, no body, all wick. How do you get this symbol to form? Well, easy. If we use the example of prices we were using on the other slide, it would basically be like this stock opened at 15, fell to a low of 5, shot up to a high of 20, and then closed at 15. So why didn't I get a body formed? Well, because the opening price was the exact same as the close price.
Mm-hmm.
So that means there was no price movement. No candle can be formed if there was no change in the price.
All that movement was it was buys and sells, but
And just
at the
imagine the odds of that.
at the end of the day, what it came in costing at 9:30 was the same cost that it cost at 4:30.
Sure, sure. Does it make sense?
It does.
Excellent. All right, let me go back one. So I'm gonna show you the power of Japanese candlesticks and why savvy traders use them religiously. Japanese candlesticks can tell you the price action over the spread of any time frame. Any time frame that can be conceptualized or quantified by human beings, you can apply a Japanese candlestick to. Any time frame. Don't matter if you're a long-term investor, a short-term trader, swing trader, a day trader, a scalper, whatever you are, Japanese candlesticks can transcend time on all charts. You ready? We're
Okay.
gonna we're gonna start with the bullish candle. This stock opened today at 9:30 when the market opened at $10. An hour later, because we're looking at a 1 hour chart, an hour later at 10:30 was down to $5. An hour later, by 11:30, it was up to $25. An hour later, by 12:30, by lunchtime, it was $20. That's what it was, how it would read on a 1 hour chart, essentially, right?
Mm-hmm.
So that's an hour. Let's talk about a day. On Monday, this was a $10 stock. On Tuesday, it was a $5 stock. On Wednesday, it was a $25 stock. On Thursday, it was a $20 stock. Now I'm gonna just keep going in that sequence: open, low, high, close, just to make this easier. So that's a day. Well, we were looking at a weekly chart. On the first week of 2025, it was $10. Second week, it was 5. Third week, it was 25. Fourth week, it was 20. It was after weeks, months. In January, this was a $10 stock. February is a $5 stock. March, it was a $25 stock. April was a $20 stock. Okay, so that's hours,
Op-
days, weeks.
open, low, high, close. Open, low, high, close.
Yeah. So the next one I go give you is quarterly. Q1, this was a $10 company. Q2, it was $5. Q3, it's $25. Q4, it was 20.
Mm-hmm.
2021, it was $10. 2022, $5. 2023, $25. 2024, $20. It could be a yearly chart, a quarterly chart, a monthly chart, a weekly chart, a daily chart, an hourly chart. We looked at all that. It could be a 30-minute chart. At 9:30, markets open as a $10 stock. 10 a.m., it's $5 stock. 10:30, $25. By 11 a.m., 20. It could be a 15-minute chart. Stock market open at 9:30, it was a $10 company. By 9:45, it was down to $5. By 10 o'clock, it was up to 25, and by 10:15, it was 20. Because that was a 15-minute chart. It's 5-minute charts, it's 1 minute charts, it's all that. So you can see candlesticks are that powerful because they transcend time and they all mean something. So you good on our first two slides?
I think so.
Good. We're gonna keep pushing in. Now you look at support and resistance differently because if you know better, you do better.
So you should never be looking at support and resistance with squiggly straight lines ever again. After you learn Japanese candlesticks, you never go back to line charts.
Mm-hmm.
Use candlesticks because they tell you more information. If this was just a line chart, all you would be seeing is a jagged line going towards support or towards a resistance. But you see these some of these wicks break far past the whole zone. Those mean something. And notice whenever you see the wicks cross deep into the zone or break the zone, what happens? It's nearly always a reversal. Almost in every single instance, when the price action hits either support, it then immediately starts rallying back up towards resistance. And as soon as it crosses into resistance with one or two candlesticks, it automatically reverts back down to retest support. And that's
Mm-hmm.
what stocks do until they either have a breakout or a breakdown. You should have an eye of an eagle when it comes to identifying potential reversal candlesticks. So some of those reversals again are things like spinning tops and dojis. Do you notice any spinning tops or dojis on the screen?
Yes.
Okay,
So
go ahead.
so um the first one that I'm seeing moving from left to right is a spinning top red, um, as you have a three red bar sequence going down. It's a very large um, doji, spinning top. Then it got,
The wicks are large,
yes, the wicks are large,
and the upper wick has crossed the
the
plane of the resistance zone.
correct. And so it drops down to, uh,
It goes, looks like it goes to hell.
yeah, until it gets down to a hammer, and then it drops into the support range after that hammer,
After
way
the
below
inverted hammer. But yes.
inverted hammer.
Mm-hmm.
And you got, even though it's green, it's saying that it opened,
Mm-hmm.
it went high, it went back up to where people were buying it or selling it at the red, but they were buying it, but then they came back down and they got out of it at the bottom of that uh, inverted hammer, went to
Mm-hmm.
the red, went through the support.
Right to China. Mm-hmm.
You got people still buying it. You can't see the bottom of that wick.
You can't, but
Mirabusa.
here's what's important. It broke support with such force.
And
That's such a huge bearish candle right there. It broke with such force that the bounce back came back crazy because it broke the zone deeply. So somebody buyers came in there, oh my God, this is just too good to be true. Ain't no way this stock gonna sell like this. And then it what it do? It rallied back one, two, three, four, five, six bullish candles in a row. And notice that
now
second bullish candle is a doji
that's
with
what I was
long.
gonna ask you. Yep, that's a doji right in there.
Yeah. And it don't mean 100% of the time you see a doji, the next candle is going to be red or be the opposite color. But it could mean, look at how big of a candle the green candle was prior to the doji. So people could have said, man, it's too good to be true. It rallied back this strong. That's a huge green candle, almost as big as the red before it. So it came back so strong that people was like a little uneasy, and it came back so strong while still in support. You still got to always respect the support and resistance zones. You have to. It's too much price action around those zones. That's why you create the zones and draw them out because they're significant. They're significant levels on the chart. So it might have been some uncertainty or neutral in there because it was such a big rally back after such a big red drop. It came back with such momentum. You had some uneasiness on some people took profits from there because some people might have bought in when it bottomed out and then next candlestick came back crazy. Some people might have took their profits and run, hence a doji. And then they're like, nah, but it's still more meat on that bone, and it kept rallying up after that doji. But guess what happened? Once it hit resistance, what did it do? It retreated again, back down to
Mm-hmm.
support. It ranged a little bit in the middle, had some chop. Excuse me, no clear cut through into the support or resistance zone. And then you notice here when it rallied back and hit the support zone with a big red candlestick with a long wick, it's a doji right there in the slap between in the blue part of the support zone, and then it rallies back 1, 2, 3, 4 candlesticks after the doji. You see that? Big
I
red
do.
doji, big green. That
Mm-hmm.
doji is the key. You identify dojis and spinning tops, you're gonna be fierce. Look to the far right, right before that big red candles, they drop down to China. Right before that, you see a red doji inside of the resistance zone, following a green candle look like with an elongated hammer. But that stock was rallying and it broke the zone and you got the spinning top and what did it do? Switch colors on you. Went from green to red.
Gotcha.
But what happened with that big red candle when it dropped to China? It broke the zone, baby wick in the zone, but came back rallying back green, green, green. Because it consistently plays a game between support and resistance. But you know more when you see these wicks. You see it better.
Mm-hmm.
You can speak more towards the buyer and seller sentiment if you know the wicks. So now, if you get used to seeing this stuff, it helps you to predict the future because you be like, "Well, it can't. Is done. It ain't like in this example I gave you just last with with the doji that sits between the big red and the big green. You can clearly see that this particular stock price action respects the zones. So you can see clearly when it breaks the support and you get a doji, what you think will happen next? So if it go red down, breaks in, it's a doji, and then go green, those three candles alone should tell you it's an upswing. You can wait for one more candle if you want that extra confirmation. That's fine. Either way, you're gonna make money because you see, with still a couple more candlesticks of green left to go. But when green got good into the resistance zone and even had the wick blow past the zone, you knew the bears was about to start coming in because they gonna respect the zone. All right, y'all. This price is running too hot. It's getting too rich for my blood. And then what it do? It came crashing down a big red candle. But notice after that, a green spinning top. And from that green spinning top, for the most part, it rallied back because there were five green, if these were days, green days out of 8. It were 3 red candles, only one of them was major. But the very next one engulfed it. The green candle engulfed that big red candle. The third candlestick after that green spinning top. Engulfing is when the next candlestick is bigger, significantly bigger than the last candlestick that printed. And it's of a different color. It engulfed the last one. So that's rallied back up and it respected everything until it got up there and broke the support zone. I mean, the resistance zone again. And then you got hit with another spinning top and it turned direction on you. So were you able to follow along with all these different examples and things I'm trying to do visually? I'm not speaking to you about dollars and cents. I didn't say no dollar amount to get in at. I ain't talking about volume. I'm not talking about
Mm-mm.
PE
Nope.
ratios. I'm
Nope. I
talking
got
about
you.
what you see on the screen, what you see on charts.
Yep.
So if you imagine a sequence like this, something's big red, then it go to little red, littler red, doji. What you
Where
think
you
gonna happen next?
where you say it again?
Let's go here. Let's say you're watching something, looking at the candlesticks print, and it started. The first one was a long bar. The second candlestick was a hammer. The third candlestick was a dragonfly doji, and then the fourth candlestick was either a spinning top or a doji. What you think gonna happen next,
A reversal.
and why?
Because that's what dojis and spinning tops identify after a run of either bulls or bearish.
what was significant if you caught it about me telling you the sequence of the candlesticks?
That you had a lot of support from the long bar, then you had the hammer as the second strength, but then it started getting weaker with the dragonfly doji.
Yes. The candlesticks kept getting smaller. A hammer is smaller than a long bar, and a dragonfly doji is smaller than a hammer. So I got three candlesticks in a row. They could be green, but if they keep getting smaller and then I hit a neutral, that could mean a reversal or the opposite. If I got three red candles, three bearish candles in a row, and then they keep shrinking in size, and then I hit a neutral, that could mean a reversal to the bulls are about to step back in. You see how that works?
Mm-hmm.
All right. Are you comfortable with me moving forward?
Yes.
All right. Got a little video for you.
The Japanese candlestick chart. Get to know the main chart patterns. You probably think that financial analysis is complicated, but it actually comes down to two simple things: reading charts and reading news. There are many types of charts, but Japanese candlestick, or simply candlestick, are the most popular ones. Such a chart consists of red and green candlesticks, or candles, lined one after another. Each candle gives you detailed information about the price movement within a specified time interval. In fact, Japanese candlesticks are the best way to visualize the ups and downs of a price so that you can spot potential opportunities to buy or sell. Let's take a more detailed look. Every candle consists of a body and one or two tails called shadows sticking out of it. The body indicates the range between the open and close price for a specific time frame, and the shadows represent the highest and lowest price levels reached for the set interval. Japanese candlestick charts are easy to read. A red candle shows that the price is going down, and a green one represents an increasing price. If you're looking at a 10-minute chart, each candle represents a 10-minute time interval. We see a green candle when the open price is lower than the close price. If the price closes lower than it opened, then the candle is red. As simple as that. What kind of signals does a candlestick chart provide? It's no surprise that candlestick charts are so popular. They're excellent for spotting market turning points. By looking at the patterns that candles create, you can often guess if a certain market is about to continue in its current direction or reverse it. Patterns that show that the market could change direction are called reversal patterns. They could be bearish, ones that indicate the change from an uptrend to a downtrend that should be perceived as a signal to sell. Or bullish, these show that a price that has been decreasing is likely to start going up and we should buy. Let's see the most popular candlestick patterns which encourage you to buy. Bullish engulfing. The bullish engulfing consists of a red candle followed by a bigger green one, which fully engulfs the red candle. The pattern is an indication for a market turning point. In simple words, it's likely that the market may start going up and you can buy. The indication is even stronger if the green candlestick engulfs 2 or 3 red candles. Hammer. The name of this candle is pretty much self-explanatory. You'll recognize the hammer by its short body, lower shadow that is about 2 or 3 times the length of the body, and a shorter upper shadow, or no shadow at all. The hammer is usually a clear indication of a declining price reversing its direction and starting to go up, so you can start buying. But just to be safe, you could always wait for additional confirmation. Such confirmation is a green candle closing above the open of the hammer, for example. Morning doji star. This pattern appears when there is a slight market movement and consists of 3 candles, a red one, followed by a doji, followed by a green candle closing beyond the middle of the first candle. If the green candle is longer than the red one, the signal is even more reliable.
Mm-hmm.
Doji star is a signal to buy.
Mm-hmm.
Some chart patterns that mean you can sell. Bearish engulfing. This pattern is the opposite of bullish engulfing. A green candle is completely engulfed by a following red candle. When you spot it, you can sell, as the sellers on the market have possibly managed to overpower the buyers and the price direction could reverse. Dark cloud cover. The dark cloud cover appears before the price drops down. A long green candle is followed by a red one that opens at a new high and closes below the middle of the green candle. Keep in mind that when trading currencies, a second candle opening at a new high is rare, so the red candle usually opens at the close level of the green one. Once you see this pattern, you can go ahead and sell, or you can wait for another, smaller red candle to form and confirm the dark cloud cover. Shooting star. The shooting star is a red candlestick with a small body, long upper shadow and a short lower one. When it appears at the end of an uptrend, it shows you that you can sell, since the price, which has been rising up to that point, may start falling instead. See? Reading Japanese candlestick charts is not rocket science. Just make sure to observe your charts carefully and you'll soon learn to spot patterns as they form. For more free trading tutorials, check out trading212.com.
All right. Now, do you have any questions to this point? I'm going to do some live examples with you, but I want to see if you have any questions to this point before I show you these tools.
No.
All right, so I'm going to open. Give me a ticker to use off of your list. One of the tickers you know gonna make it to the next level.
Oracle.
All right. So we're gonna go rock with Oracle for a second. All right, so I pulled Oracle up. I put the link that I'm on in the chat so you can follow along. It is Trading View. It's a tool for charting. So you're not gonna use Yahoo Finance to do your charting. You can, but no. The pros use Trading View. So I'm gonna teach you trading. All right.
Okay.
So all right, so we got Oracle up. First thing I'm gonna show you is the ticker's there. You pour it up. We're on you see it says 1 week. We're on a weekly chart. We're on a weekly chart. Okay. Now you see my screen, right?
Yes.
Every candlestick represents 1 week. Now
Gotcha.
look here. What you see right here? What's going on right up in here?
You got a spinning top.
What's this right here?
That's a doji.
He died on the cross. Ain't that a cross right there? A crucifix? Literally a doji. And it was rallying up 1, 2, 3, 4, 5. 5 weeks in a row, Oracle was gaining momentum. And then you see the pure doji, and what happens? 3 weeks of pain. And you come down here, and this looks, it's like a hammer. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks of bliss. Then it look like a spinning top right there, close to it. 3 weeks of pain. Foof. They want to rock this price up. And it gets choppy right here. For that whole month, it was tit for tat. Bulls versus Bears. The Bulls took over. Right at a price level right here, 199. How interesting. I told you a long time ago that people count their money in what? Fives and zeros. There's gonna be
Mm-hmm.
there's gonna be psychological resistance. Like man, Oracle been $100 and something a share for the last 3 years. It's 200 now. It's about to be worth 200 now. Psychological levels.
Mm.
And the chart said, you see all this rallying here from once it got to 190, it was a lot of chop. What did it do at 180? Right here, around 170, between 170 and 180. Choppy. Choppy. Because you counting your money in fives and zeros. So we
Mm.
saying it's a $50, 150 stock. It's a look at how it went up in stair steps. You can almost see it. It's like a staircase up. Now we're gonna get off the weekly. We're gonna take a peek at the monthly. But you see on here, you go 1 month, 3 months, 6 months, 12 months. But this is the monthly chart on Oracle. So each candlestick is a month. So you look at the monthly chart, they look like they're in a downtrend.
Mm-hmm.
If you go to a weekly chart, you can't really tell. It looked like it's bouncing back, but just had a pull a spinning top pull down. But it looked like it might rally back up. Now down here, trade view, D's are dividend payouts, E's are earning dates. So here on you click down there on Monday, the 9th of September 2024, they beat earnings by almost 4.5% on their earnings to the bottom line, and they were beat their revenue on the top line by 0.5%. And they did that in September. Come October, they paid a 40 cents per share dividend. Here's another earnings that came out. This earnings came out on the 9th of December, and they had a miss. They missed their earnings by just under 1%, and they missed on their revenue by under 0.5%. So not a big miss on either. A miss, but not a big miss, right? Paid their dividend, and then something here interesting. What does it say? Latest updates. Fact of the day, Oracle shares increased by 3.3% in pre-market trading, contributing to a rebound in technology stocks following a previous session's decline. After DeepSeek tech stocks still win, here's how things are getting reset. Oracle joins forces with SpaceX Starlink to revolutionize cloud connectivity. Massive $500 billion bet on U.S. tech future in these companies, and hit more events. Like you want to know what's going on with your company. So not only does it show you charts, it shows you news. All right. Now before I put moving averages on here, I'm going to zoom out. I like weekly charts. I'm going to zoom out, and I'm going to try to see if I can identify some important price levels. And I do see them. And all you do is you're playing connect the dots. You're connecting the highs and the lows wherever you see the most touches. You're literally, not figuratively, eyeballing it. I just drew a level. I click this icon up here to draw a line, and I see that these tops, when I spread out and zoom in, it's a lot of touches on this line here. I see it here, 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 here. This is close. This is up in there, here. That's a level. That's a level that's respected.
Mm-hmm.
Because all you doing is playing connect the dots. Where do you eyeball and see the most dots touching or line touching? You can draw a line there, and they don't all have to touch perfectly. It just needs to look like it's some traffic in there. And if you look, I see some traffic here. So this is like a level to right about what, $100. How ironic. I didn't know how much it was, but I saw the touches. So when Oracle broke past $100 a share, it created a level, a psychological level. All right, this is the floor. Oracle ain't going back under 100. But then it got here, it got closer to the 130. You saw resistance around 128, 120 as it's approaching 130. We're not ready for Oracle to be 130. But before it got there, you see these just based on support and resistance on all this chop. It's in the channel. It traded sideways all this time. Literally from June of 2023 till June of 2024. So for a year, Oracle was trapped in this channel between 100 and $130 a share, where you could have bought it down here and then go up there and you sell. You could have rolled it out. And whatever go up there, you sell. Go back down here, test it again. You could buy more. It raised back up, takes profits. It come back down to test the level again. It can buy more. It kept rallying up, got up here. What did it do? Broke down because it hit this resistance, rallied for a while, then it broke through resistance. Once it finally broke through resistance in June of 2024, it reset the level. Old resistance became new support. Because when it came up and hit this doji I talked to you about earlier, and it came back down to the old resistance. Old
Mm-hmm.
resistance created new support. A new zone right here where you saw some chop was around
Mm-hmm.
146. Because it started maybe making the zones tighter. Be here, they could play between 100 and 130. We get here, it's like, no, we're going to make the zone tighter, 130 to 145. It's like a $15 spread, but it respected it because these are all weekly candles. This is happening that's a whole week of data in that candle. It respect the zones. We can come out here and you stretch it out because remember, it permeates all time zones. I'm going to stretch it out. And now in this new area where I'm at, I can see that there's going to be some chop up here clearly because it is resistance here. So whatever's up in here, I know it's something up in there with it. I can tighten it up and I can say, I see a little bit of something wonky up in here. I see some little traffic up in there, a few candles touching around there, and a little bit of action here. Oops. And you get used to this the more you practice drawing your lines. You're just drawing your support and resistance, identifying the chop you see on the chart.
Okay.
And then when you trade, and you don't trade down here expecting to get all the way up here. You can get in while it's in the zone and you know your support and resistance. If it gives you a breakthrough, you respect the breakthrough and the level resetting. But you should be able to see stuff differently because I drew these lines and I drew them on a weekly chart. So now what are we going to do? We're going to go to our weekly down here and we're going to zoom in and go from weekly down to 1 day and see, because it doesn't erase my lines, right? It just gives me the data based on daily candlesticks now. But it almost, look at that. The daily respects the shit out of my lines that I freestyle with you on here in front of you. You see how it respects it?
All that trading within there within the day.
And you
Mm-hmm.
see how it almost perfectly got each trade support and resistance zone or where the action was at. But I started on the highest time frame. You want to get the overview and zoom down to find your opportunity.
Gotcha.
That makes sense?
It does.
Cause you see here it gaps up. Some of these twice, 2, 3 times, 4, 5, 6. This stock gaps up and gaps down. And notice it does it on killer volume. Cause all these bars at the bottom represent volume. So whenever you see a gap up, look at the volume down here. Crazy volume. Crazy volume.
Mm-hmm.
But they happen to do what? Align when it shoots up. What it did it on the earnings day. This is a daily candle now. So this literally lined up when earnings came out. Very next day, stock popped. Boom, popped to a whole nother level. This was a $112 stock before earnings. After earnings was $126 stock. Here, you can see the doji I can see it right here in front of my face, and I see this earnings. Earnings report came out. It was a doji. They didn't know what it was gonna do. Boom! Whole new company. Right? It was down here flirting with the 120s. Next day, 139, 140s. And it respected the zone and traded within it. And then boom, here goes another earnings report, and then what? Volume, boom. Now it's a $150 company. You see that? And then it's trading in the zone again right here, some chop, just like it did down here. Each zone is going to either do one of two things. It's either going to break it and have a breakout to the up, bullish to the up, or have a breakdown and fall through the support. But this one is almost to a T, respecting each support. Rallying ranging sideways here, bam, up. And it wasn't based on earnings. It's just based on, that's what it did. It broke the zone, right? It broke the zone between the 163 and the 179. So once it did, it rallied past 180. Now, and 180 became the floor. That became support now because you got touches here, 2, 3, and these try to approach it, but didn't get there. But 1, 2, 3, 4, 5, 6, 7, 8, 9 candles respected. And then you got these high highs over here that respect the 197. So basically, no, we ain't ready for you to be a $200 company yet.
Mm-hmm. Mm-hmm.
Now, one thing that TradingView could also help you with, it says here, Oracle over here on the right. Next earnings report is in 44 days. So you know how this stock tends to react with earnings. If they're on track to have a good earnings report, what you think gonna happen? Because now, if you look at the chart, it's 164. We already see it's been up here in this range, trading between 180 and nearly 200. And it's 164 now. And we know tech stocks just took a hit because we know about the deep seek AI thing from China. Because we know the news and we know the charts. So they're not gonna outsmart us at our own game. These are companies we own. We gonna know what's going on with our companies. Oh, we know why this candlestick is here. Because China just dropped that thing on them. And all the tech stocks sold off. What did it do? It created a buying opportunity. If a stock was up here approaching 200 uh a couple months ago, and it took a stair step to get here. It didn't happen overnight. It happened over the course of like a year. We said from June of 23 to June of 24 did this rally. If nothing's changed with the actual business itself in the stock decline because of some external news, that means you have an opportunity to buy a good company for a cheaper price because it was an oversale potentially. Are you with me so far?
Mm-hmm.
So are you ready? Are you ready to get more gangster?
Okay.
So we're gonna hit indicators. And I'm gonna type in here EMA. And that's an exponential moving average. We're not doing simples no more. You know simple, I taught you simple. You know simple. So I'm gonna put two EMAs on here. I'm gonna put a 9-day and I'm gonna put a 40-day. So I'm gonna click on here and I say length. I'm gonna say 40. The 40-day is gonna be my long. That's gonna be my long on here. All right, it's gonna be my long price. And you see I can change the colors. I can make the line as thick as I want. These are, remember, moving averages. It's the smoothed out data, right? It's the smoothed out data. So I got this here. 9-day. Go with the thick line here. Nice. So now we're on the daily chart.
So we got a death cross right up there on December the 10th or something like so.
Friday the 13th. How
Friday the
convenient.
13th. And then we had a potential golden cross, but it looks like it retreated.
Because of China, right? Took a quick retreat. Grand opening, grand closing.
Mm-hmm.
But to be able to speak to it, you know why. And on the daily chart, you can see right here, what is that? That looked like close to spinning top to me. It definitely looked like a green attempt after this big red bar. If you zoom in more, it may not be too far off before this crosses backs up and flirts back with its zone. And notice how tightly smooth those moving, how tightly close those lines are to the candlesticks. I use a 9-day EMA versus a 40-day EMA. The EMAs are more closer to reality than the SMAs. The SMAs are simple. These are exponential. So they give more uh, priority to the most recent price action. So you see what's going on when you add the moving averages along with the candlesticks, along with the support and resistance lines. starting with the monthly chart, weekly chart, and zooming down. Now we're on daily. And you can say, hey, I'm about to trade today. Oh, you going in today? Yeah. All right. I'm looking at a 4 hour chart. All right. If that's your business, that you want to do, it's a 4 hour chart. Now, the 4 hour chart, it almost looked like it's starting to rally back a little bit, or at least experiencing some chop. Let's see if it looks any different on a 1 hour chart. Because the closer you are to making a trade, the smaller the time frame is. Are you thinking about trading this tomorrow? It's okay to look at a 1 hour chart because it's only 8 hours in a day. So this is like a few days. You know what I mean? It tell you at the bottom how many days you're covering. But the point is, you can see how the candlesticks react to the support and resistance lines as well as the moving averages. And notice whenever the candles are above the moving average, it's in the uptrend. Whenever the price falls below the moving average, it starts to retreat. Death cross, look, stayed out. And look at how many red hours those were after the cross down. This stuff is scientific. That's why I'm showing you stuff that look like this. Right? You in your 4th week now. This don't look like our 1st week no more. This is gangster. Most people don't know this stuff and don't know how to rock with it. I'm gonna show you another indicator. All right, so I didn't log in, but I'm gonna take off my moving averages because you know all about those. I'm gonna type in here RSI. RSI stands for Relative Strength Index. You got it?
Mm-hmm.
All right. So if you look at the bottom, it pre-codes this zone here is purple, right? If a stock is over the 70 mark, it's overbought. And it's probably time to take profits because the sell-off is on the way. And if a stock is below the 30, that means the stock is oversold and the price is too low and it's bound to rebound because it's in the danger zone. So if you zoom out and look, the price typically reverses once it breaks the zone. Once it touches it or breaks, it's like it's overbought. All right, they're gonna sell it down. They're gonna sell off. It's oversold. All right, they're gonna buy it back up. Over here, look, it's oversold. What they do, it rally back up. It stays in the mix in this zone until it gets like over here. You see here, it got too high. This is a RSI 70, 69. It's gonna fall back down and touch the thing. Whenever it's down here flirting around too long, it's bound to rally back. So the RSI is the relative strength index, and that's important when you're looking at because you can see at a glance based on the RSI if it's overbought or oversold. So that's just letting you know from the emotions. And look at all the chop. And this is your company. This is Oracle on a daily chart. You see all these buying and selling opportunities just based on the RSI alone. You should see the peaks and valleys. It should be blatantly obvious to you because you know and respect support and resistance.
Everything between 38 and probably 68, you could have made profitable trades if you're going up and down and seeing the candlesticks properly.
Probably is. I mean, several times it hit 30, but it looked like you could have if you wanted to go 38. I mean, that's that's a little bit higher than the real indicator, but you can see it was still some eating there. If you took RSIs at 38, you would have still left some bread on the table for some quality trades. You see some of those 38s you bought wind up falling down to 28s. You get what I'm saying? So you might have
Gotcha.
entered into them and lost a little money, but then you just know to rally back. But if you know 28 is an insane RSI, insane. Like that's when you can clearly see that's when it's getting good. It's happened too many times on the chart. But definitely respecting the 30 and the 70 because they're pre-populated. And
I
that's just
see
the
it.
rule of thumb. You see that. It like
Mm-hmm.
literally it kisses the 30. It's out of there. Out of there. But yes, down here, this was an example. We got the 39, 38. So I see that 38 right there. Out of there. And then to pull it back down here and hit to it down to an RSI 30. Look like 34, 30. 33, 32, 33, then out of there. So yes, as it approaches, then out of there. I approached 31. This was a rally back that was only 45. I wouldn't play a stock at 45 based on the RSI. Because again, RSI is trying to help you identify the extreme, overbought and oversold. A 45 RSI don't tell me nothing. Because to me, if you look at the chart with us at the 45, 50 range, it just look like just a regular day at the office. It's still room above and below it. But when you get to a 30 and you go out, just even go weekly chart. We can zoom out from a daily chart. You can go to a weekly chart. It hits 30, it's out of there. And you see that though. I mean, you can clearly see what this stock does on a weekly chart. And this going back, this is 15, this is all this is almost 15 years of data right here on our screen. This is what this stock does. Just what it do. Men can lie, women can lie, the numbers don't. Ball don't lie. This is what the stock do. And you see it respects the living daylights out of that 30. RSI get to 30, it's oversold, and this is rallying back. Every chart don't look like this, but Oracle's does. And it's important for you to know how your stock moves, not how every stock moves, because you don't trade every stock. But your stocks, you need to know how your stocks move. And if you can tell me I've been studying the charts, I can see they pay their dividends. All them blue D's look like, okay, they pay their dividends. And I can spread out and look at the E's. They got a lot of green E's. They got a couple red ones, and they were recently. They had an earnings miss over here, but it was down 1% on the earnings and almost 2% on the revenue. All right, and over here, less than a 0.5% on the revenue and less than 1% on the earnings. So really, if they miss them, they ain't crazy misses. 1%, 2%, 1%, 0.5%. They don't miss like that when they miss. Right? But in this one, when they hit, they hit 4.5% on the up and 0.5%. And this one they hit 2.5% and flat. This one 1% and 1% flat. This one 3.5% on the earnings, flat on the revenue. 5.5% surprise on the earnings, flat on the revenue. 1.5% surprise on the earnings, and really flat on the revenue, right? You talking about you missed out on 29 million, $30 million out of 12.5 billion? That ain't no money. That ain't no money to a company like this. So as a treat, I'm gonna give you one more, and that'll be the lesson for this evening. What other company would you like to look at and do some charting with me on?
Let me look at grab my phone.
Or you need to pull up your homework? I still got it open.
It's on my phone.
Okay.
Lowe's. LOW. Yeah. Home improvement.
LOW. Let's look at Lowe's and see if they got something good for us. All right, so the RSI is still on this chart. I'm on a weekly. I'm gonna zoom out because before I get into RSI, what's the first thing I want to do? What's the very first thing I want to do when I get on the chart?
The zones.
Yes. The very first thing I want to do is play connect the dots. And I'm literally just eyeballing it from what I see. Because that's all I can go after. I'm literally just trying to identify it where I see the tops and bottoms of price action. And I don't try to fill my screen up with too many candlesticks. I mean, it's not candlesticks, but lines. But I do go off what's blatantly obvious right there in my face. You know what I mean? I can't ignore what's obvious. I have to respect it. It's like right there. And I just showing you to say you don't have to start all your lines from the same space. Cause like this area up here is a new zone for this. This ain't been this high. So I gotta, but that's the top of the candlestick. That's the top of the wick. That's as high as you've been. But really, the real pure zone to really highlight, if I was really, would be down here. It would be here because you see the more touches, the top of 3 wicks touch right there. That would actually be the zone, and that means that it broke the zone, rallied past the zone here, and then came bearish engulfing
Mm-hmm.
down, retested the support, touched here to hit the resistance, came back down, spinning top, hit back again with inverted hammer resistance, doji right there, right? Resist, like we sick of playing with you trying to break this zone. Go down, boom, double whammy, bearish engulfing. 3 weeks of rallying, ranging, choppy. Let's go try to retest the zone. Guy look like a spinning top, close to a doji. Bam, inverted hammer, going back to break through that previous zone. So that previous resistance, it can now recalibrate, potentially be former support, right? Because they have support here. You see how many candlesticks cross that line. And when you go back in time, these past weeks back here in March of 24, you saw I drew them lines. It respected that zone. And I drew that just, eyeballing. And that's data. These tops, I saw this way back from 2021. Look, I went back to this line. I went back to 2020 to draw this line because I saw this action up in here, back in 2021, 2022. And it came back and respected it again in 23. And then it came back here and respected it some more in 24. 24. So if this pulls back down again, it could fool with this 235. If it don't hold and maintain up there, because that's the next zone. It respects the zones. If you can't draw support resistance zones, you a ducking whatever, you're a sitting duck. Now look here. When it rallied up, right? Everybody thought stuff was sweet because it was down here at 210 and rallied all the way up to 280. So if you made $70 a share with your greedy self, but didn't sell nothing. But look up here. The RSI it broke up to 72, almost 73 on the RSI. What happened? It came coming back down. What you see happen here? 72 on the RSI. It's coming back down. What's up
Mm.
here? 67 on the RSI. That's too close to 70. It's coming back down. And what did it do? It went to 32, almost to the back to the. That's the game. But you
So
can see it on the chart.
your relative strength index will definitely set the range of where your stock should be when it hits its highest resistance and its lowest support.
My guy. This one class is worth the price of admission for the 5 week course. I promise you. In my opinion, humbly speaking.
I got you.
I told you it was a special project though, so I don't spend this extra time with everybody.
I appreciate
I
it,
want
bro.
you to see it. I want you to get it. Cause I know you know what to do with it. Hopefully I got some wheels spinning for you.
You did. That's why that's why I'm just sitting and listening. I had to teach myself these candles, and how I taught myself, it was entirely different than what you're teaching me. I mean, I could pick out patterns. I did not do resistance and support levels because that wasn't a necessity for what it was I was doing. I was doing binary trading, but I the doji and spinning top reversals were something I never knew how to definitely chart. I only knew the hammer and the inverted hammer, and of course Maribosos.
And you can see it right here too. Rallying up, boom, doji, rally come down. Spinning top, another doji. We're gonna stay down. We're gonna try to rally back up. Boom, another doji. We pulling this thing all the way down. Right? Those are the key. Can you see the combination? Or just like here, when you see all these dojis and stuff up here, that's uncertainty. It's too much with they don't know what to do with it. That's why you
Then
got
you
little
look at
bitty
the
candlesticks.
relative. You see, if you look at the relative strength index, it's gone over the
Because
70.
it was way over there. But on your chart, the chart up here, you wouldn't know alone just when you can't. You're like, I'm getting money, I'm getting money. Oh, it's going up towards my resistance. Yeah, but then you got hit with the doji right in front of your face too, right here. Like I don't know about that big fella. That's already a doji and it's hitting resistance level. It's gonna pull back. And if you looked at the RSI, you like for damn sure this is it's too rich for my blood. Look at how high the RSI is. You said 76. It's too high. It's off the chart, literally. It's off the RSI chart. So the key is you layer stuff on top of layers. You know how to look at things from a volume perspective, from a simple moving average perspective, death cross, golden cross. You got the volume bars on the bottom. You know how to respect earnings, misses, makes, and surprises. And now you have RSI. All these things can be layered on top of each other. And it's way more stuff, but you know enough to get jiggy for sure already. And you still got a whole nother class to go. And more time to put more of this to work into train and practice with it. You know what I mean?
Most definitely.
So we're about at the hour and a half mark, a little over that. See if you have any more questions for this evening.
No. I must try and play around with the charting.
Yeah, play around with TradingView. I sent you the link. You know how to change the name of the ticker. You know how to change the time frame from monthly to weekly. I typically draw my support and resistance based on the weeklies. Because you got to have a lot of, I think you need to have several touches to make a zone. And monthlies may or may not do that for you. I look at them and consider them because I could glance to see if we just flip this to a monthly, are we in an uptrend or a downtrend? It looks like we're in a uptrend at this point. This is a
Mm-hmm.
monthly, but you just see it's way fewer candles because every candlestick's a month of data. So, but yeah. But if you look at it on the monthly, it ain't overpriced, but it's still about a 58. So a 60, it could rally up a little bit more. But right now,
Now go back 1, 2, 3, 4, 5, 6 months. Go back 6 months.
okay, August,
Yeah. Now that's showing a doji
where?
on that 6-month one.
This?
Yes.
It's not a.
Is that
I guess it could be a dragonfly. Sure, that's a dragonfly doji. That's fair. That's
okay?
fair. It's a dragonfly doji. It's not a pure doji. It's a dragonfly doji. Let's see if I can find you one on a weekly. Zoom in. This is a doji
Gotcha.
for damn sure. On December, Monday the 2nd, that week, that's a pure doji. You see it. It's just a crisscross.
Mm-hmm.
Nobody. These are like dragonfly doji. These are smallers. But this is
Okay.
the pure boy. The price didn't change at all that week.
Gotcha.
But all these are good. These are good. These are good, almost dojis. This is another dragonfly doji. This is a tombstone doji. Those ones have bodies, a little bit of body. This is a pure doji. You see that? No body. And it's a perfect setup because it was a green candle, doji, red. Pure reversal.
What did you call a tombstone doji?
Yeah. Yep. That was like it's like the second slide. I'll go back and show it to you. Just to give you a quick refresher. Here. Oh, shooting star. I'm sorry. It's also called a tombstone, but yes, shooting star.
Shooting star. Okay.
Yeah.
Okay. Shooting star. That's the one where it's at the bottom. Looks like a pogo stick.
But that's also called a tombstone. Dragonfly. tombstone. We always know tombstones are the ground. Dragonflies are up. But yes.
Gotcha. Okay.
Makes sense.
Yep. It was a bearish.
All right, my brother. Well, if you don't have any more questions for me, you know the routine. You have your recording and another assignment within 48 hours. And we'll take it from there.
Okay.
And you got to go back and fill out your missing cards from last week's homework.
Yeah, I put that back in.
Cool. All right. Well, good work, sir. Good work as always.
All right. Thank you very much.
Very
Appreciate the
welcome.
education.
Yes, sir.
Talk to
All
you
right.
soon.
Yes.
Roo.
Roo.